Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market alert for Tuesday, October 4th. Global stocks continue to sink today amid increased fears about a possible Greek debt default. Eurozone finance ministers again delayed a decision on Greece's next round of bailout funds. The meeting planned for next week to discuss the situation was canceled and rescheduled for next month. That will give the European Union, International Monetary Fund, and European Central Bank time to complete their review of Greece's finances. Officials also said that private bondholders may have to suffer bigger losses on debt than expected as part of the Greek rescue plan. That would be extremely bad news for the region's banks, which are heavily exposed to Greek debt. That news is hammering the entire European financial sector today, but the biggest losses are in shares of Dexia. The French and Belgian lender is tumbling more than 20% on speculation that it may have to be split up.
All this uncertainty in Europe has traders expecting a Greek default and analysts reassessing their outlook for the eurozone economy. Standard & Poors now puts the probability of a double-dip recession at 40%. It's forecasting growth in the 17-nation eurozone at just 1.1% next year, down from a previous estimate of 1.5%. S&P cites deteriorating business sentiment and an expected slowdown in U.S. economic growth as reasons for the downgrade. Meanwhile, Goldman Sachs is going even further, saying the eurozone will fall back into recession by the fourth quarter of this year. Analysts there expect GDP growth of just 0.1% next year. And Goldman also cut its forecast for global growth from 4.2% to 3.5%. Global investors are having a dramatic reaction to all this negative news. Stocks across Asia finished broadly lower overnight, with Hong Kong's Hang Seng Index falling nearly 3.5%. In Paris, the CAC 40 is posting similar losses, while Frankfurt's DAX index tumbles more than 4%.
The sovereign debt crisis has pushed the euro down sharply recently, and it's now trading below $1.32 against the greenback. The US dollar is mostly higher against other rivals in the currency markets, and that's weighing on commodities this morning. Crude oil is falling another $2, now below $76 a barrel, on concerns about slowing demand from the United States, Europe, and China. Meanwhile, gold is giving up some of yesterday's gains, dropping back around $1,650 an ounce, despite its traditional status as a safe haven investment. But another safe haven, U.S. Treasuries, are as popular as ever. The yield on the benchmark 10-year note is all the way down to around 1.75%. The asset markets may see some movement later this morning when Federal Reserve Chairman Ben Bernanke testifies before the Joint Economic Committee on Capitol Hill. He's likely to face questions about the effectiveness of the Fed's Operation Twist debt swap plan, as well as questions about the sluggish economic recovery and U.S. bank exposure to Europe.
Speaking of the U.S. financial sector, it's likely to be in focus again in the equity markets. Yesterday, Bank of America lost nearly 10%, closing at its lowest level since March of 2009, and shares of Citigroup slumped 9%. Today, both stocks are set to open nearly 3% lower. Aluminum giant Alcoa is also taking a big hit in the pre-market, down nearly 4%. An analyst at Dahlman Rose cut his profit and price targets for the company, citing softer demand and lower prices for aluminum. Alcoa is set to officially kick off the third quarter earnings season next Tuesday. After today's closing bell, we'll get quarterly results from Yum Brands. That's the latest from Weiss Research. We'll be back after the opening bell with all the market reaction.